Good morning, ladies and gentlemen. My name is Vasil Dikov, Senior Account Manager with GDMFX. We start with the North American markets. The events from Friday last week. The retail sales in the US for the month came out with 0.1%, better than expected at 0.2%. The retail sales excluding the autos came out better than expected with 0.1%, again with 0.1%. The retail controlled was 0.3 better than expected at 0.6. The Dow was 25 points up, the Nasdaq 38 points up, the Dixie down to 96.16 from 96.65. The US dollar gained 75 pips versus the Canadian, it gained 40 pips versus the Swiss franc, and it gained 75 pips versus the Japanese yen. This week we'll have the FOMC Minutes, and on Friday the CPI in Canada. In Europe, the German CPI for the year came out with no change at 0.5%. The CPI for Germany for the month, again no change at minus 0.8%. The German GDP year-on-year came out with 2.1% with minus 0.3, better than expected. The EU GDP for the year was without any change at 1.5%. The Euro GDP quarter on quarter, again no change, 0.3%. The DAX 30 was 80 points up, the CAC 40 54 points up. The Euro was down with 60 pips versus the Canadian dollar, and it was up with 95 pips versus the New Zealand dollar. Today we're waiting for a speech from Mario Draghi and the EU trade balance. On Tuesday, EU and Germany ZEV survey. Sentiment on Wednesday, the ECB non-monetary policy meeting. On Thursday, the ECB monetary policy meeting accounts. On Friday, the German PPI and the EU consumer confidence. Moving on to Great Britain, sterling fell with 0.3% versus the dollar and 1% versus the euro last week. With weak domestic economic data and the Brexit debate picking up speed, the markets have become quite bearish towards the pound. This week we'll have two other events which may put even further pressure on sterling. Inflation data and unemployment data, and the EU summit where it will be discussed the deal reached by Donald Tusk and David Cameron earlier this month. An agreement on it will give David Cameron the green light to set up a date for the referendum. The FTSE 100 gained 153 points on Friday, closed at 5,719. The pound gained 118 pips versus the Japanese yen with a 310 pips range. It gained 77 pips versus the Australian dollar with a major downward movement today, and it gained 300 pips versus the Kiwi with a 370 pips range. Today we're going to have the Rightmove House Price Index month on month and year on year, and during the rest of the week we'll be waiting for inflation data, that's PPI and CPI on Tuesday, and unemployment and wages data on Wednesday. Moving on to Asia and the Pacific. The Japanese GDP came out with minus 0.4% at 0.7. The Chinese trade balance for January was with 2.2 billion better than expected at 63.3 billion. The Chinese imports were down with 6.8% at minus 14.4%. The Chinese exports were also down with 4.2% at minus 6.6%. The Japanese industrial production for the month was minus 0.3% at minus 1.7%. Japanese industrial production for the year down with 0.3% at minus 1.9%. The Nikkei 225 was 262 pips on Friday, open today with a bullish gap of 160 points. The pound versus the Japanese yen was 123 pips up, and the dollar versus the Japanese yen was 70 pips up. On Tuesday, from China, foreign direct investment. Wednesday, in Japan, exports and imports, adjusted merchandise trade balance for January in Japan, and on Thursday in China, CPI year-on-year, month-on-month, and PPI for the year. In the Pacific, Governor Glenn Stevens' message in his testimony on Friday was that the Reserve Bank of Australia remains in wait-and-watch mode, assessing the domestic impact of a rout that swiped more than 8 trillion from the equity markets worldwide. Australia has the flexibility to ease policy further if that will aid the economy, Stevens said, as he gauges the sustainability of recent job strength against the potential impact of global market upheaval on demand. Governor Stevens was trying to inject a sense of calm, really, confirming that is a soft bias to ease, but they don't expect to be acting at that time anytime soon. The jobs numbers this week may have more attention paid to them, or rather they are even more eagerly awaited than previous months because of the turmoil in markets is driving investors to safety, and given the amount of confidence Stevens has put in the labor market, traders will be scrutinizing the full data behind the headline. The Australian dollar was 110 pips versus the New Zealand dollar, and the New Zealand dollar was with 80 pips down versus the US dollar. Today on the calendar we have the retail sales and the retail sales excluding auto in New Zealand. On Tuesday we're going to be having the Royal Bank of Australia meeting minutes, and on Thursday we're going to be having the Royal Bank of Australia Assistant Governor Edie giving out a speech. Also we're going to have employment data. In the commodities, the Baker Hughes US oil rig count report showed that the number of rigs drilling for oil in the US decreased by 28 to 439 last week. The oil prices staged a dramatic rally on Friday, with the US benchmark posting its biggest one-day gain in 7 years as a renewed possibility for a coordinated production cuts prompted investors to close out bets on lower prices. Crude oil prices remained weak in Asia on Monday, but off earlier lows after Japan's GDP data and Chinese trade pointed to a dim demand prospects. Oil resumed its decline below $30 a barrel as Iran loaded its first cargo to Europe since international sanctions ended and Chinese crude imports dropped from a record. Gold had a range of $14 down to $1,218 right now. Silver had a range of 18 cents at $15.37 now. The crude had almost $3 range at $29.35 now, and natural gas is trading at $1.96 at the moment with a range of 7 cents. On Tuesday we're going to have the API weekly crude oil stock. On Thursday, the EIA natural gas torrent change, and on Friday, again, the Baker Hughes US oil rig count. Thank you and have a nice day.